Welcome back, traders, to my YouTube channel. In this video, I'll be giving you guys an in-depth analysis and breakdown on GBPCAD, giving you guys a glimpse of how I actually formulate a bias and look at different technical instruments to help me identify a high probable winning trade. So the first thing you guys want to do is go on the weekly time frame and to look at the most recent candlesticks. And when I say recent candlesticks, I'm talking about the recent 3, the recent 4 candlesticks, just so we can get an understanding of the overall momentum in the current market. So if we look at these candlesticks right here, it's quite obvious that the momentum is towards the upside because we had a strong bullish presence right here where we had a 1, 2, 3 bullish candlesticks, and the third one being a huge bullish candlesticks. Then afterwards we had a bearish candlestick showing a sign of a rejection. However, last week we printed a strong shooting star candlestick, a bullish candlestick, which does indicate that the buyers are still in control and still want to push towards the upside. So with that being said, and looking at this price action just on the 4-hour time frame, our bias is going to be bullish. Now we have to drop down on the lower time frames and to establish and to strengthen our overall bias, which we just mentioned was bullish. So what I'm going to do right now is I'm just going to write our confluences down so we have them in chat, so we know what they are. Confluences, okay. Then we have the weekly bullish shooting star, okay. So first confluences that we have is the weekly bullish shooting star. Now on the daily time frame, we can even use these moving averages as well. If we look at price action specifically, you can see that after price formed this double bottom right here, the bulls started to step into the market and starting to be very, very aggressive in the way that the candlestick started to form. Now obviously there was a level of resistance here somewhere, and we saw that the bears started to step into the market. But if you look closely at price action after this shooting star formed, which was the strongest bearish candlesticks at this given time, we saw that there was a long wicks being left behind and the candlesticks started to close in a bullish manner. Now that just tells me, just purely price action, that the buyers are in control and the bulls are in control. The reason being that the wicks left behind tell us that the bears step into the market, but every single time the buyers step in and push the bears out of the market, essentially closing in a bullish candlestick. So I'm just going to write that down. So we have a daily price action bullish. Okay, and another thing I noticed here is that we have the MA crossover. When the blue is on top of the red, that just means that we are in an uptrend. And because of the big gap between these two moving averages, it tells me that the momentum is actually very strong since the crossover occurred. So with the strong momentum towards the upside in the MA crossover, with the daily price action being bullish and the weekly shooting star, this is pretty much enough to tell me that we could be looking for a nice break towards the upside and our bias is going to be bullish. But because this is an educational video and I want to go really in depth, we have to drop down to the lower time frames and to look for even more confluences. Now what I noticed here as well is that we are in a bullish market structure. After we look at right here, we had our first impulsive move, we had our retracement, we had our second impulsive move, retracement, third impulsive move, retracement. Price failed to create a new higher high and the bears started to step into the market over here. However, as price came down to create a new lower low, market structure broke again as price came up to create a new lower high, and then we failed. We came up, so we made that retracement to make a new higher high. We pushed down again. So now this right here is the new higher low, and price pushed up to create a new higher high. So what I'll be expecting is maybe something like this to occur and a new higher low to occur before a big push towards the upside, which we are looking to enter a buy position on. So I'm just going to write bullish market structure on our Confluence list. Okay, so now that we've established that we're looking for a new higher high to occur, I'm just going to put this on the Confluence list. So we have a bullish market structure on the 4-hour time frame. Okay, now we also had this nice level of resistance, which markets seem to be respecting. However, on Friday, we actually had a strong closure above, which does indicate that the buyers are still in control. Now, although we did form the shooting star, it's not that significant as the market essentially closed right after. So with the bullish market structure on the 4-hour time frame and price closing above the mini resistance area, it does show us that the buyers are really in control. Now, essentially what we have to look for now is for this level to be broken on the daily time frame. We have this level of resistance right here. Okay, so I'm just going to draw on this zone because obviously each level is not one specific number, rather it's a zone, each resistance. Now, with that being said, what we're going to be looking for is a daily closure above this level right here. The reason why it's a daily closure is because we formed this level of resistance on the daily time frame. So whenever we have an analysis on one specific time frame, we have to wait for the candle closures on that time frame. So because this resistance is on the daily time frame, we have to wait for the daily closure above this level of resistance, and then we can drop down on the 4-hour time frame, look for that retest, and then we can look for that buy position towards the upside. Now our upside target is going to be set around this level right here. So let's just see here. Okay, so we have, okay, so our level of, we could look for around 1.73 seems to be a good target. The reason why I'm making it 1.73 is because it's a nice round number, and on top of that, you guys can see it did act as a strong level of support and a strong level of resistance in the previous months. So with that being said, a daily closure above, we can wait for that retest, and then on the 4-hour time frame, we can look to enter that buy position towards the upside. Okay, so we would be looking for something like this to occur, where we have a target set around 1.73. and our stop loss could just be somewhere around this level, and we can look for a nice 1:5 to 1.550 risk reward ratio. Now, I do want to be clear here. If we do not have the daily closure above this level, then this trade is invalid. Okay, so it's very important that we have this daily closure above. Also, with that being said, because we have a daily closure above, it does not mean that price is going to continue to push towards the upside. Rather, we have to wait for confirmation before entering our position. That's why I highly recommend you guys click the Telegram link in the description below, so you guys can keep up to date with this specific trade as well, because this is one of the trades I'm looking for next week. Quick recap. Essentially, our Confluence is the weekly bullish shooting star. We have it seems like I deleted it. However, we have the weekly bullish shooting star. We have the daily MA crossover, the daily price action showing us that there is bullish presence. We have the 4-hour market structure and price breaking above this mini level of resistance. So essentially what we're waiting for is a closure above 1.71758, which is a daily level of resistance, and we're targeting 1.73, which happens to be a nice key level, key round number for GBPCAD. I hope you guys enjoyed this video, and I hope to see you guys tomorrow, where I'll be uploading more breakdowns for the trading week ahead.